Welcome to ForexTV.com. Today is Tuesday, September 23rd. I'm Kathleen Reddington with your New York Forex Market Buzz. The dollar is making some gains against the majors today after big drops yesterday. And now for a look at the latest headlines from the CEP News Desk. Fed Chairman Bernanke and U.S. Treasury Secretary Henry Paulson told lawmakers that Congress needs to act swiftly to address the financial market turmoil and not drag the process of passing legislation with unnecessary provisions. They went on to remind listeners that the Fed typically prefers to let financial institutions resolve their own financial difficulties, but in the case of Fannie Mae, Freddie Mac, and AIG, non-intervention would have resulted in larger problems. And in news from the North, Canadian inflation rose at its fastest pace in 5.5 years. For August, it climbed at an annual rate of 3.5%. The headline inflation rate was pushed higher by rising energy prices. Gasoline cost consumers 26.3% more in August than in August of last year. The core CPI index rose 1.7%, up from 1.5% in the past 4 months. The core index leaves out volatile items like gas, mortgage interest, fresh fruits, and vegetables. Core CPI increased 0.3% month over month for August. And in some overnight news, both the Eurozone manufacturing and services purchasing manager indexes dropped to some of the lowest levels in 5 years. Economists speculate that the negative growth in the second quarter could spill over into the third. They fear that the Eurozone may be falling into a recession. The Eurozone PMI for manufacturing is expected to fall more than 45.3% for September. September's figure is the lowest seen since December of 2001. Economists had expected a less pronounced fall to 47.3% from August's 47.6 level. Today we are joined by Brian Dolan, the Chief Currency Strategist for Forex.com. Hi Brian, how are you today?
Good afternoon, Kathleen. Fine, thank you.
All right, now let's start off with the big news as Henry Paulson and Ben Bernanke are on Capitol Hill answering questions about the bailout. Some of the topics being debated would mean some of the most sweeping changes for the U.S. since the Great Depression. How does this affect your strategy for the dollar for the long term?
Sure. Yesterday we had the knee-jerk reaction to the unveiling, at least of the notional amount of the bailout package of $700 billion, and the markets did not like that, and the dollar took a dive as a result. But today, a little bit saner or greater sanity is starting to return to the market. People are looking at it and realizing that $700 billion is not going to be the ultimate amount, and so I think the reaction yesterday was certainly outsized and extreme. It was exacerbated by long dollar positions being cut out. But today what we're seeing is a pretty distinct reversal and the dollar recovering more strongly. And the key thing to keep in mind here is that the bailout package from the U.S. government represents a positive for the U.S. economic outlook and a positive for the U.S. dollar. And the fundamentals elsewhere have not changed, and we just got a reinforcement of that from the Eurozone PMIs that you just went through, all dropping to and dropping lower than markets had forecast. So the reality is the economic fundamentals outside of the U.S. continue to deteriorate while the U.S. is arguably on much better footing. And once this package is passed, the U.S. economy, I think, is going to receive another shot in the arm. And I'm looking for the dollar to return back down to the low 140s in the next several weeks.
All right, now following up on that last question, with the shaky news from the Eurozone and with all eyes on Capitol Hill, the dollar actually gained on the euro after the open in the U.S. session. However, it's likely that the dollar may only be gaining because yesterday's huge drop is just too big to sustain. What is your take?
Yeah, my take is that the outlook for the U.S. is arguably much stronger than most every other economy in the G7, and so that the dollar strength is going to persist. And so yesterday was the anomaly. Today is the correction of that, I believe, wrong move. So what, and certainly if I had asked you to, or you had asked me 2 weeks ago whether we'd ever see 148 or 150 in the euro again, I would have said slim chance. But the market just gave us a great opportunity to try to resell the euro, try to resell the pound, and to buy the dollar against the Swiss franc.
All right, and now taking a look at some of the overnight session, the sterling dollar pair struggled overnight to get below $1.85 in the European session, and the UK had some negative news like low mortgage approvals, but we've seen the dollar gain on the pound so far this morning. And do you think we'll see a lot of volatility here, especially after yesterday? What is your strategy for the sterling dollar?
Sure. Of all the currencies to sell and buy the dollar against, the pound I think stands out as the likely weakest. And tomorrow we're going to get CBI retail sales report for the UK, and very likely it's going to be an alarmingly weak number. So what we're looking for there is further weakness in the British pound, and I would expect to see that dropping back under 180 again in the next several weeks. And given the speed of certain moves, we could be there by this time tomorrow.
All right, and back to this side of the Atlantic, Canada had an increase in their CPI, higher than what was expected. After the CPI release this morning, the loonie is up for its fourth straight day, as there's speculation the Bank of Canada will have to be more patient when regarding interest rates. What is your strategy for the Canadian dollar going forward?
Yeah, the Canadian dollar is not exhibiting a great deal of volatility against the U.S. dollar. It's mostly in a 103 to 108 range, and the 103 area was a significant break point on the way up for the dollar Canada. And so I'm looking to reestablish long dollar Canada positions on this weakness down into the basically 102.80 to 103.30 area. And ultimately, commodities, going back to the fundamental outlook, global growth is still slowing, commodity demand is still eroding, and I look for the Canadian dollar to soften on weaker commodities, as well as the ongoing back and forth of a relatively weakening Canadian economy.
Thanks for joining us, Brian.
All right, thank you, Kathleen. My pleasure.
This has been your New York Forex Market Buzz with Brian Dolan, Chief Currency Strategist for Forex.com. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.